Alright, quick recording here. This will, I guess, be podcast number 5. Apologies for the front part of 4 being cut off because I didn't record it properly. I'm hoping to record this one properly, but just wanted to quickly jump on here to discuss essentially yesterday in terms of the announcement from the Federal Reserve of sorts of their kind of data dot plot, which I guess threw off markets to some degree because markets were up yesterday and then they were down over 1,000 points by the end of the day, sharply as a result seemingly of either the comments or the dot plot, the projections that the Fed is making. And so I just wanted to quickly get my thoughts on this subject because, again, I'm not an expert in economic analysis or anything like that. I just have opinions based on certain trends that I've been seeing by reading about them in the media. So just to get myself a little bit of information here, let me just open up the stocks app. Yeah, so markets are even down for today, but let's just pick the S&P and get into our weekly things so we can see that dive off has been pretty good. What did they lose? At least 1 to 3% yesterday, etc. Everybody looks at the Dow Jones because it has the kind of the best number plot or whatever. It's the highest number, so it's the easiest one to make sense of between that NASDAQ, S&P, and the stock exchange in New York. I mean, whatever, but bottom line, market's down over 1,000 points yesterday, and I've sort of given a little bit of a take on this previously in other formats, but essentially I just don't know what people are so shocked about that, market sell-offs like that are necessary, rational, etc. I just fail to understand because, when I've looked at the information as far as I understand it, which again is not an expert perspective, I don't have a degree in economics, finance, any sort of analysis along those lines, so anything I'm doing is not the opinion of an expert by any means, but it certainly seems to me that the rising inflation that clearly and obviously has occurred is occurring in the United States and other countries. I'm not going to speculate on the cause of inflation because that's obviously complex and multifaceted. So to try and explain that all would be foolish, in my opinion. You got to talk about so many different factors when you look at that. But clearly, I think you can point to COVID, if not being responsible for it, at least being a focal sort of turning point event that is not an event in terms of one day, but a period of time that shifted things because of the amount of money that needed to be used to prop up economies kind of across the world during that fragile time where they basically needed to lock things down. Arguably that went on much longer than anybody anticipated, and one can speculate about the nature of the economic effects of cities just being way emptier than they were before and all these sorts of things, and just some of the things that were done as far as the loans that were given out that were COVID related, emergency funds propping up businesses. Again, not going to say that's a bad idea on a macro level, just that it has seemingly had inflationary effects to some degree. Again, probably doesn't, it's not a panacea to explain the whole thing, not a theory of everything, but it's part of the puzzle. So, obviously inflation has occurred. Anybody who wants to dispute that point can go argue with a river. Like, what are you talking about? Inflation isn't occurring in the United States and elsewhere. Of course it is. Like, let's not dispute basic facts. So then when we get beyond the basic facts, people will argue about what the cause of inflation is. Is it corporate driven, where corporations are essentially taking advantage of people and driving up prices more than are reasonable because they're taking advantage of a crisis situation in a sense, just like, the price of water goes up right before a hurricane, and all these examples of the ways markets can be distorted at certain moments in time for various reasons. So there's aspects of potential corporate greed to, like, because I would read articles back, during COVID or right afterwards, which were along the lines of, XYZ company posted, XYZ financial returns today, yada, yada, yada. And, Pepsi or Coca-Cola or M&M's or whoever the hell it is, like, they're just, they're flabbergasted by how much shit they're able to sell to people at seemingly such a higher price. It's remarkable. People are paying for it. And so, I'd read articles like that and be like, are those companies really doing the right thing? Not morally, of course, but from a business perspective, are they doing something that's not sustainable over time, and therefore they're kind of rushing out ahead of where they should be? They should be smoothing out these price increases, if anything, to take advantage of the demand without making it hellaciously expensive for people. But I don't think that's the thinking. And kind of regardless of that, I found it odd that so many of these reports is like, why people are buying so many Oreos, and it's a little more expensive, but golly darn it, they're buying it. And it's like, it seemed a little exploitative, but that probably also doesn't explain the entirety of the situation. Certainly the government flooding the country with free money, essentially, no doubt that had an impact. What the impact of that is, potentially unclear, but, probably had an impact, was all the COVID sort of stimulus at the state and mostly federal level, the various things that they did, whatever they did with unemployment insurance. Long story short, I didn't get any of this money, so good for the rest of you all, I guess. But as far as I'm concerned, I didn't get a whole ton of help during COVID, to be real with you. And, that's not really important. But I'm just saying that, there's allegedly all this money out there, and I think I got like $500 from Massachusetts once. But that notwithstanding, clearly people received a good amount of money. Apparently they spent a lot of it on clothes. You know what I'm saying? Like, who knows what people spend money on, how much debt to money ratio people really have. I'm not going to get into that here. That's not important. But clearly people spent a bit of that money, may have put some of it away. But, I didn't see any impact of that myself. But, I would be open to the data and the argument that it did have an impact, because that makes a lot of sense. So, like I said, though, all I'm trying to establish here, inflation has been happening. It's been a phenomenon, I think, has a lot of causes. And then when we look at it, because we're trying to fix it, right? Inflation needs to be fixed. Although, we're causing it, but whatever, we need to fix our problem. And what are the mechanisms that modern societies have for combating inflation? Well, the main one that we're made aware of is like the central banking systems, the Federal Reserves, et cetera, all the other central banks around the world. Because I was reading an article about Russia's one today or yesterday, I can't remember, but it was basically somebody or something saying they're going to raise their rates to like 23% because their inflation is at like 8%. So that's kind of Russia's situation, their war economy, etc. But they're dealing with inflation too. And then on our front, obviously the Federal Reserve is the most visible sort of force directly responding to inflation and tasked sort of to attack it in the limited ways that they have available to them, because I guess people think that the Fed has more powers than they do, just like the way people think the president has more powers than they typically do, or, et cetera. People overestimate how powerful these institutions really are, even though they fail to understand how powerful they actually are. But that notwithstanding, as far as I understand it, though, the Fed has a few ways to combat inflation and to otherwise sort of impact the economy, and it's raising and lowering interest rates, which I'm not going to get into an explanation of what that is. I'm just going to assume that you know it. So if you don't, sorry about it. But the Federal Reserve essentially keeps interest rates at certain levels in order to create certain economic effects. I think we can say that generally and move forward with that as a premise. So, for example, it was in early on in Trump's administration, I guess, but he had Jerome Powell in at the Fed, and he, I guess Trump was maybe angry at Powell for starting to raise interest rates. But what the matter seems to be is that, after the financial crisis of the late 2000s, 2008, essentially 2009, and the aftermath of that, via quantitative easing and other tactics in order to prop up the economy in various ways, inflation was essentially just artificially low for a very long time. Or not inflation, interest rates were artificially low for a long time for, whatever reason. And you could say, what is the weakness of the economy? Obama didn't do enough to lead a stronger recovery and blah, blah, blah. I'm not going to get into political attacks on the only politician I think's worthy of the respect over, other than Ed Markey and others. But, that notwithstanding, criticizing Obama, saying, the economic recovery from the recession wasn't good enough. It's like, oh, are you also the people saying he should have thrown the bankers in jail? Because if you are, you had to understand that he had the whole metaphor of we're flying the airplane and we've got to land this sucker. And yeah, there's a fire on board, but, if we're going to land this plane, we're going to have to do it a certain way. And clearly the way they did it was with a soft touch on Wall Street and not the most amount of help to Main Street, and just kind of that sluggish recovery came after, whatever policies that they put in place at the time to, with Obama's stimulus bill and all sorts of other stuff that they certainly seem to have tried. Economic growth seems to have been somewhat mediocre, you could say, I guess. But again, I think saying that might be saying too much. What was the depth of the economic crisis? How serious was this issue that they were dealing with? Can you really just wave your hand at and say they should have done something else? Unless you have the specific proposal in mind, my policy is shut the fuck up, or at least only express your opinion insofar as it's your opinion and it's limited. It's not a panacea, theory of everything sort of thing. But to get back to it a little bit, it seems like Obama sort of presided over a presidency with low interest rates in order to prevent hurting the economy. And then during Trump's presidency, whatever you think of their tax cuts nonsense and blah, 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 how that creates economic growth, they certainly did the tax cuts angle and a few other things early on during Trump's presidency. And then the Federal Reserve started to raise interest rates a bit. But long story short, COVID came through and threw a wrench in that whole process, where they had to, I think, make interest rates negative for a tiny bit of time or whatever they did. But they swung pretty quickly, and I'm just actually going to look that up on the computer, because that's easy enough to look up U.S. interest rates history, because that's important. But as far as I'm concerned, this sort of quantitative easing era leading into them trying to increase interest rates after such amount of time, and then whatever's happened where they had to go super low with rates in the beginning of COVID and then begin raising rates early 2022, and by August having the rates up between 5 and 5.5%. So obviously the rates have been going up with these rate hikes in the last couple of years, and September 2024, the Fed cut rates for the first time. So I don't even want to be looking at this. I want to look at some history thing. I want to look at the 2010s for this, basically, because that's the important sort of time period that I'm talking about here. But this notwithstanding, I mean, my opinion's more general than just to have all the information in front of me, so I'm not going to let that trip me up too much. But bottom line is, the Fed needed to start raising interest rates in the aftermath of COVID. It just made no sense to me at the time, seeing what inflation was doing, that the Federal Reserve wasn't going to have to intervene, because that's what they're there for, not fundamentally, but that's one of the things that they do, is they are there to combat interest rates issues, to change policies in ways that put the economy on a better footing, whether that's preventing the economy from overheating or helping to stimulate the economy slightly through quantitative easing, whatever the sort of the whatever the matters of that is. I just think people have had unrealistic expectations as far as interest rates in general, because people have seemingly been very resistant to the idea that, interest rates were going to go up, that they were going to stay up, that they were going to be elevated. And my whole point the whole time, not being the most educated, was if this has to do with inflation is incredibly elevated. Like, I don't think people really seem to appreciate enough the fact that that inflation capped at 9.2% on a month-over-month basis, or 8.8%. It was somewhere absurdly high, close to like the stagflation rates of way back in the day in the 70s and stuff. And so you look at that sort of thing, and you've got to be concerned to say, our inflation is up. It's set like that. We can't just, and I finally have the interest rates plot up here. Thank goodness. All right. But I just thought, if inflation is so elevated, you can't do nothing in response. You have to pull on the levers of government that you've gotten. One of them is our unelected but appointed by the President Federal Reserve or President of the Federal Reserve, whatever that governor, whatever that position is called, Jay Powell is in right now. But that person is appointed by an elected leader, and then they're meant to be politically independent, to do things in care of the economy, generally speaking. And so with this sort of dot plot out, and not the dot plot, that's the Fed's thing, I shouldn't even say that. But so if we let's just look from 2000, because I'm curious about this, because again, I'm not the most educated on the subject, so watch me learn and drink water at the same time. So, all right, beginning 2000, interest rates up around 5.5%, elevate to a bit over 6%, and 6.5 or 6.86 in June 26, 2000, and then they come down, presumably because there was the dot-com bubble burst, so there was a recession, so they needed to lower interest rates, because they went from, let's see what the high is, 6.86 June 26th, and then by April 22nd, 2002, they're at 1.79%. So interest rates went down, and then 2007 interest rates went up, and anybody who's seen The Big Short knows that when the interest rates went up, that's when Michael Burry won, in the sense of the economy crashing and just a horrendous situation. And clearly, right, so the Fed, let's see here, 5.25% July 23rd, 2007, and then October 1st, 2007, we're at 4.77%, and dropped, oh my goodness, so yeah, so they were going down by whole points, quarter points in these months. They were dropping interest rates to zero by 2008. Okay, not totally zero, 0.12 or 1.15%, but very low interest rates. And then I'm just gonna look at this history here. So clearly interest rates basically go down and are down almost all of Obama's presidency. So they are never significantly, no, not even for his re-election. Interest rates are never elevated. 2016, they're 0.37%. But then Trump's administration comes along, and like I said, Jay Powell is starting to raise interest rates all the way to 2.44% in April 22nd, 2019, before they came back down after that. And then obviously, let's see, yeah, interest rates were actually, though, they were going down from the spring to, going down from the spring to the fall of 2019. Then they go way down for all of 2020 through the end of 2021, basically zero. Then 2022 starts, and of course in May they start to raise interest rates. They go by a half point, and then quick elevation of interest rates. Now, I mean, just like I said earlier, the level of inflation circa 2021, 2022 was so fucking crazy that I, at the time, was saying, why isn't the Fed doing more? They should be moving more quickly. And then even looking at this on a graph, though, they moved fairly quickly. And I think, I'm going to say this, the Fed did not see this coming as far as the inflation thing. There's statements about it from Janet Yellen and Powell, are clear evidence to the contrary. But nonetheless, when they saw this happening, it seems like they responded in a decently rational way, where they understood they were going to need to raise rates. And, I'm going to put this out there. People complaining about that shouldn't. You know what I'm saying? It's reality. What are we doing if we're not dealing with situations in reality? That notwithstanding, let's just kind of look at this. And so it's May 2022 or April 2022, they do a quarter point raise and then a half point raise. So they're month after month, they're starting to get more serious, and then the raises kept going and going. And I remember when the rates, so let's just put a date, August 22nd, 2022. You've got interest rates at 2.33%, which I think inflation was 3 or 4 times that at the time. So clearly necessary. And then obviously the rates have gone up all the way to roughly 5 to 5.5%. So that indicates essentially the degree of seriousness of the issue. Because when you look at this, the Fed has not raised interest rates like this since the 2006 through early 2007 period, right before the crash. And the last time they had rates that high was from the late 90s to the early 2000s, so like the dot-com bubble, which I'm not going to say I understand it or have explained it fully, but this is just what I'm kind of observing is, interest rates go down during recessions, and then we try to raise them again, and then we cause more problems, and then blah, blah, blah. And then Obama's presidency, basically 0% interest rates, which, looking back on that, I mean, it was intentional, but I don't know if that was the best policy. But again, I'm not Barack Obama. I'm not qualified to question those high-level decisions from an expert's perspective. I just have an opinion on it. But I would definitely say when they started raising interest rates in 2016 to 17, I definitely think that was probably a good idea. And then that's stupid. Probably a good idea. And just again, it's probably a good idea that they've been raising interest rates until recently when they did their cut in September. And, I think a cut at that point was warranted because there has been progress made on inflation. So I'm not going to bring up an inflation chart, but just, thinking about it from its peak in like 2022 to kind of the ebb that it's at right now, where, it was up last month by 0.01%. So, or 0.1%. It went from 2.6 to 2.7%. So inflation was elevated, and I think the news article should have been more explicit about that, and they kind of tried to sugarcoat it for people for whatever reason. That irritated me that was the way that those articles were being written. But certainly I think an interest rate cut was warranted at this point because of the fact that they'd gotten inflation back below 3%. It's more under control, although I'd still argue it's bad, and that the situation in general is fairly bad just because of the effects of inflation, that, that 8.8% inflation or whatever it was, that doesn't go away. It's a compounded problem that if inflation were to get that bad again would be made even worse. But right now, that price increase and set of price increases, that happened, and that's never coming back. So that's just something to understand there. So my whole point in my discussions with people about this has always been, what sort of data are you people looking at that makes you think that we shouldn't raise interest rates? Whether it's 2022 or whenever, if inflation is so elevated, what are you doing about it? And if you're going to do something about it, which is arguably to raise interest rates, then, clearly that's what needed to happen. But then also that means that needed to be a sustained campaign. It wasn't going to be a couple months. We were going to have to get a difficult issue under control. Everybody knew that inflation was going to be difficult to return to the 2% goal of the Federal Reserve, and that goal may not be realistic in the future. It may have to be increased essentially because of inflation. But, that notwithstanding, I think we're living in a world where economists, I think, were being captured by self-fulfilling prophecies. They were looking for data that gives them more reason to elevate their portfolios, their this, their that, their opinion of this. And, I don't think they look the situation right in the eyes some of the time. And this is one example where they've been basically not believing that interest rates were going to go up, not believing they were going to be elevated, not believing that the Federal Reserve, which is not automatic, it's a bunch of people voting and stuff, that they weren't going to make a decision that was going to be kind of, broadcast ahead of time. You knew this is what the Federal Reserve was going to do, largely speaking. They were going to raise rates, keep them elevated for a bit, try to see some progress on inflation, and then consider rate cuts. And so, all of 2023 seemed like people were chomping at the bit about getting those rate cuts. And I just think those people are frankly crazy, because we still had rate hikes to go and they were talking about rate cuts as if they were going to happen. And it's like, what, according to whom? Who gave you this information? And did you come up with this information largely because it's convenient for, your portfolio, essentially, that you would like it to be this way, but it's not that way. And if you have to look reality in the situation, it's going to hurt. And I just think you need to look reality in the situation, or just look at it for what it is and not try to delude yourselves. And so I just think anybody who's been betting on the Federal Reserve to cut interest rates in 2023 or early on in 2024, I just think you people were frankly a bit delusional, and then you've been overestimating these things, and you don't seem to predict anything right at all, whether that's that sort of that market that people play around in where they're speculating about interest rate cut and hikes and what's gonna happen and how much money is essentially on each side of the bet, and that's what people think is going to happen, and they've been so wrong so many times, and I'm not going to even verify that. I'm just going to say that in general, that every time I've been reading about what economists think the Federal Reserve is going to do or anticipating this, that, and the other, they've been just wrongly oriented for a long time. And so, we look at a situation like yesterday where the Federal Reserve, I think rightly indicated, it's like inflation is back up from 2.6 to 2.7%. So as far as our cutting rates is concerned, it's possible that the Federal Reserve shouldn't have cut rates in September, right? Let's just throw that out there and say that that's possible, that or not in September, but that we've done essentially one too many cuts at this point, because August 26th, we're 5 to 5.5%. Then we get a quarter or a half point cut September, and a quarter point cut as of December. So or the month before. I'm losing track of the thread, and this is not the most important because I'm over speculating about this, which I don't really know about. But I think they have been somewhat aggressive in their lowering of interest rates, taking the half point measures, the amount of times that they have and whatnot. So I think that they have made good progress on lowering rates so far. There's a long way for them to go on their side of lowering rates, but it'll happen over a course of time. What I don't understand is you have a day like yesterday where there's like 1,000-point sell-off in the market after they learn that the Federal Reserve is going to be hawkish, essentially, and cautious about lowering rates too quickly and all these things. And I just think it's the same fundamental mistake that's been made the entire time. And I've asked people about this, and people have not really had the answer that I've wanted. It's like, what do people really think is going to happen with inflation and interest rates? Do you really think they're going to go down? Like, I don't, but that was just my opinion as sort of a prisoner of the moment of the flash of inflation getting somewhat close to levels that it was during sort of the stagflation, or not even to that high of a level, but when it gets to like 8% you get concerned. And I've potentially overvalued the thoughts about that, in terms of just if they were able to deal with it, inflation is now down at least to 2.6 or 7%, then we're not in the full-on crisis that we would be if inflation was up at 8% for several years, for example, or if inflation was up at 8% for several years, because that would be a crisis. That would be awful, I think. I guess that's speculation too. But again, I just think when you have days like yesterday, which arguably that hurts people, that there's a 1,000-point sell-off. It doesn't help anybody, I guess. Maybe it helps somebody, but it just seems like an irrational response to something people should have known about. I don't understand how economists are making so much money but they can't make predictions about things like interest rates and inflation. Like, don't they have the data, better data than I have, more data, more ability to analyze the data and better understand it? Why am I sitting here as the non-expert telling people, of course, interest rates are going to be elevated higher for longer, and the people who think that it shouldn't be are seemingly just completely ignoring the problem of inflation, don't have a plan to fix it. So that's all to say. I just think a reaction like yesterday, where there's a 1,000-point sell-off in however many few minutes after an announcement from the Federal Reserve that essentially their dot plot wasn't in line with investor expectations, that there's this whole sell-off and now it's a buying opportunity after the sell-off. And it's like, what are we doing? That's not rational behavior. That's fucking crazy. Like, you guys should have known that inflation was causing this and that this was a more serious issue. You need to take it seriously, and that, you know, when inflation was up this past month, we should have been more alert to that, saying, well, you know, if the Federal Reserve then comes out with their dot plot, maybe things have changed. Like, being surprised at this point is frankly unacceptable, because who do these people think they are? They think they're the masters of the universe, and that's why they deserve to get paid all the money that they do. And so if they think that, then why don't you go out there and make accurate predictions for once, instead of telling people things that are not true about there's going to be interest rate cuts in summer 2023, and there's going to be this, and there's going to be that. It's like, you don't know what you're talking about. You're crazy. You're out of your gourd. And if you're an expert and I'm not, then frankly, being an expert in this case means relatively little. And again, that doesn't make me an expert. And that's an important point to note here. I don't fundamentally know what I'm talking about, but I'm just having certain thoughts being like, this affects me because, you know, I don't know where these economists have been writing these articles about wage inflation somehow caught up to inflation or whatever they've been trying to pass on to people, but it's a load of bullshit. And I think it's meant to trick people, but you know, that's a larger thing about the way economics and market reports are done in the media. But just overall, I would like to see inflation not happen the way it did again. And I think we should be and have been taking steps to address that. And so anybody's so unrealistic to not understand that interest rates were going to be higher for longer, and then you're the one out there costing people money in the markets by causing all these ridiculous down days where it frankly seems like the market is probably just, you know, overinflated itself. It's in a bit of a bubble, so to speak, and that these, you know, 1,000-point down days or whatever these days are, that, you know, they are essentially the market beginning to correct itself, not the end of the correction, but part of that process. And that's concerning because, you know, I think business is better done by honest people. You know, you tell people what you're going to make and when you're going to make it, and you don't lie about it because you want to be realistic about what it is that you're doing. And if you're not doing it, you need to know that you're not doing it and not delude yourself. And so I think there's a lot of people out there that have been deluding themselves, and I don't understand it, but the people who I won't accept it from are the economists who think they know better than everybody, because they don't. And not to call them the C students, but like, I'm better educated than they are in certain respects, and some of the things that they do really make me question what the orientation of those things is, you know, broadly speaking, because I really think there's a lot of exploitation at work. I think exploitation is frankly the point of the system, not a symptom of a problem. It's literally the manifestation of the system itself. But that point notwithstanding, I think if any of these people in the market have any fiduciary responsibility for any clients or whatever, they owe them better than to constantly be misleading them about interest rates, inflation, and whatnot. So not to say that I know what the answers are in these cases, I really don't, but we should be following the data. If the data says something, we need to listen to it, and we need to stop giving ourselves over to self-fulfilling prophecies, because prophecies in general, get them out, and self-fulfilling prophecies are even worse. So let's go about things in a more rational way. All right, thank you.